Hello, good afternoon. You've tuned into your stocks on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai studio. A quick look at what the market is doing, and 23,200, that's broken again for the day today, and 23,178 is what the Nifty is trading at, back in the red, down 0.1% is what the benchmark indices are seeing a decline of. Even sensex is 76,400 levels, around that is what the sensex is trading at, so keep an eye out on that. Almost on the red territory, flip-flopping between the red and the green, or trying to come back to the green side is what the Sensex is doing. Broader markets, that continues to underperform. So you're seeing Nifty mid-cap as well as a small cap continues to decline of more than 1% in trade. Small cap actually is down more than almost 1.9%. So almost 2% in trade is what the decline is coming in for the Nifty small cap. Nifty Bank also is not performing well today, down 0.2%. And pressure especially seen coming in the pharma names as well as some of the real estate names that are seeing clear pressure coming in. But yes, that's how the market setup is looking like as of now. But this is the show where we solve all your stock related queries, and to solve all those queries related to the stocks that you'll have sent, we have Somil Mehta, who is of Mirae, as Sharekhan joining in with us, while we have Astha Jain, also of Securities, joining in with us to solve those doubts. Thank you so much, Astha, as well as Somil, for joining us on the show, and it's a pleasure having you both here. Let me start with the first query then for today. We'll talk about the first stock, that is Adani Power. Now, Deepak Joshi is writing to us from Karnataka. He's holding 50 shares of Adani Power at a price of 550 rupees per share. So as of now, making some bit of a loss on this one. Wants to know whether he should continue to hold this or maybe look to sell the stock. Somil, let's start with some of the technicals coming in for Adani Power. What is it looking like? And good afternoon.
Good afternoon. Good afternoon. Thank you for having me on the show. Adani Power looks all right to me. I think it's consolidating in a downward sloping channel, and it's a broad range. But I think it would take support around 500 levels, and then again start the journey upwards. I think 500 would be a very crucial level to watch out for in the very short term. And the 20 hourly moving average, which is 523, will act as a very crucial resistance going forward. And if it sustains above this level, I think the next level to watch out would be 570, and that would be the target in the short term.
Okay. Keeping an eye on these levels over there for Adani Power. But on the fundamentals, what is Adani Power looking like, Astha? And good afternoon.
Hi, good afternoon to all of you. Yes, talking about Adani Power, first of all, we all know that the demand for power is very high. And what is the projections which are stating right now is saying that demand for power projection by 2030 will be at around more than 300 gigawatt. So now if I talk about this particular counter, they already has an operational capacity of around 17,000, which they have plans to increase to 30,000 megawatt going ahead. So the company has a strong plan to increase its capacity, and as well as industry tailwind will also be there for the company. In fact, they have a competitive merit order position if I talk about their contracts. And in fact, their two-based tariff model is really keeping their EBITDA in the sustainable manner. So looking after all these factors, I think Adani Power is a good long-term story to bet upon, and hence one can remain invested in the counter. Price target can be set at around 550 to 570 odd levels for the longer term.
Okay, that's a word coming in on Adani Power. Let's move on to the next query. We have Rohan, who's writing to us from Kolkata. He's holding 20 shares of Coal India at a price of rupees 300 per share. Currently, Coal India trading at 385. Now, he wants to know whether he should continue to hold this or look to sell this. Astha, what is your thought coming in for Coal India? Some analysts have even anticipated a 3% CAGR growth over the next 3-4 years. But a muted growth is what is expected in terms of growth revenue-wise. But what is the outlook looking like on the fundamental front? And given that the viewer has bought it at 300, does it make sense to continue to hold this?
Yes, it makes a sense to continue holding this counter. Why? Because this is the company which contribute to around 77% of the total coal production in the country. So, I mean, they have a merit over there. In fact, the company is now expanding its coal washer capacities also, and by this expansion, company will be in a very good position to cater the future opportunities present in the sector. So I think this is the best counter in this area to bet upon. So one should remain invested in the counter. In fact, we are recommending buying buying on dips also for this counter. Right now, it is quoting at around 385. So buying on dips can be done at around 370, 80 odd levels with a price target of 410 to 420 at the initial levels.
Okay, keeping an eye on those levels, and a quick check with you as well, Somil. For Coal India, what are the levels that the viewer should keep an eye out on?
I've been keeping a very close eye on this counter, and I think this counter is very oversold on the daily charts. The momentum indicator has already given a buy signal. So I think from here, it's very positive, looking very positive, and the support would be around 380, and the next support would be around 374. I think in the very short term, there's a small inverted head and shoulder pattern formed, and the targets would be around 400 in the very short term, and after that it will be 412.
Okay, let's move on, and we have Jain who's writing to us from Indore. 50 shares of Ireda is what he's holding at a price of 200 rupees per share, and he wants to know whether he should remain invested in this one or look to sell the stock, making some bit of a loss right now because Ireda is trading at 195. Your view on this one, Astha?
So I would recommend to hold for a longer period of a time. Now, talking about this counter, this is the pure play green financing NBFC. And what we have seen in the result is the drop in the GNPA's ratio. And as we were talking earlier about this financing of power play financing, so I think the demand of power will be there. So definitely this power play financer will definitely have a good headroom to grow in the future. So I believe that this counter is worth keeping holding on. Maybe some downfall can be seen in the shorter term of duration, but in the longer term, it will again regain its good, price momentum. So I would recommend hold on this counter. Initial price target, which we are keeping for this counter, is at around 220 odd levels.
Okay, on that note, we'll slip into a very short break because after the break, we'll come back with a special segment, the Growth Code, which is an initiative by Grow and CNBC-TV18, where we'll address your questions on how to navigate the market and make informed trading decisions. So stay tuned in. Welcome back and thanks for staying tuned into CNBC TV18. It's now time to focus on Growth Code, an initiative by Grow and CNBC TV18. Whether you are new to trading or a seasoned professional, our goal is to provide you with actionable insights and strategies that will navigate the market and make informed trading decisions. Now, to help solve all those doubts today, we still have with us Somil Mehta of Mirae Assets, Sharekhan, and also joining in with us Ashish Kyal of Wave Strategy Advisors to solve and answer all those queries. Let's start it with the queries for this segment then, gentlemen, and we have this first query coming in from Parvati, who's writing to us from Kerala. She is a new algorithmic trader and wants to know how to figure out of which algo product is best for someone who's just starting out with the equity markets. Somil, let me take it to you first.
Sure. I think if you're a beginner, I think you should start for platforms which are offering, the tools for beginners. Focuses on, products which have minimum setup requirements or execution requirements. That's what I would be focusing on.
Ashish, what is your advice coming in for Parvati?
I would suggest that it's very important, firstly, to understand what's the risk appetite and capital that you want to deploy. That is very, very important. You need to understand in any of the algo products, there is always going to be drawdowns. You need to understand that it's not going to be 100%. So you have to understand how much are you willing to deploy, how much is the risk that you are willing to take. And if you are coming in for the very first time, you need to explore a lot of things. You need to do your own homework and do your own studies and also see the back-tested results of how it has delivered. And there are drawdowns. Drawdown means that there are maximum loss that you see over a period of time and doesn't go in favor. So you need to see all of those things is what I would suggest.
Okay, let's move on then to the next query. We have Khushi Khurana, who's writing to us from Noida. She wants to know the strategies that a beginner should focus on when choosing an algo trading product for the first time. So what is the strategy that, one should look at, Ashish? Let me take it to you first.
See, with respect to strategy, there are many simple strategies that work as an algo. There are even moving average strategies that work, but you need to know that which strategy works in which kind of a market. So, for example, in a trending market, moving average might work well, but in a non-trending market environment, it will fail miserably. So you have to understand those strategies, and basis of that strategy, you have to also know how to tweak that, because not every product will work in every market environment. So you need to know when to tweak that strategy when it's not working, and you need to have that know-how. So I would suggest, do not buy a black box where you have no understanding about it, because you don't know what to do next. You should have understanding of any algo that you are taking and how to read that, how to tweak it, and then select the product accordingly.
Absolutely, depends on every market condition, how you decide your strategies as well. Somil, anything you would want to add to this?
I think for beginners, you need to select very simple strategies. Simple strategies means trend following strategies or breakout strategies overall. If you start selecting very complex strategies, it will not work for beginners.
Okay, let's move on to the next query. Komal Jain is writing to us from Madhya Pradesh. She's asking how she can actually evaluate the performance of algo products before committing to it. And she adds that what are the key matrices that she should be looking at? Somil, let me take this to you first.
There are a lot of parameters where you can actually calculate how to evaluate a performance. The first thing is the past performance. You need to understand the past performance of the strategy and evaluate what kind of performance is that strategy giving you annually, monthly, weekly. Then comes that drawdown, the worst performance of the strategy. You need to know what kind of performance is giving you at the worst performing time. Then comes a strike rate, the success ratio of the strategy. What kind of a strike rate is that strategy giving you with every trade? And then comes to as risk reward ratio of that strategy.
Okay, and Ashish, your view? What should the viewer be doing?
So the key metrics that one has to understand is something known as Sharpe ratio. So Sharpe ratio measures about risk-adjusted return, that how much risk are you taking, and accordingly, what's the reward that you are getting. So something like that is important. Max drawdown is definitely very, very crucial, because you have to go back and check when there is a bear market, how did the strategy perform? When there is a bull market, how did the strategy perform? So you will come to know that when there is an adverse movement, what is the maximum loss that you can see at a series of it, back-to-back losses, are you okay with that or not? And to what extent? It's very, very important for you to also understand when to stop using that algo, or when that algo has stopped performing the way you were expecting it to be. So that's tipping point. Knowing that tipping point is also very crucial.
Okay, important to keep an eye out on those tips that are coming in there. Let's move on to the next query. We have Jain, who's writing to us from Karnataka. He's looking to diversify his equity portfolio with algo trading. Now, he wants to know some good algo trading products for trading mid-cap or thematic stocks. Is there anything specific like that one could look at, Somil? Okay, let's go to Ashish first. Ashish?
Yes, there are different types of products. There are quant-based mutual fund schemes that are there. I think nearly there are 10, 12 schemes that offer that product. It is based on, there are fundamental analysis, which is based on quant, basis on the earnings momentum that is looked at it. That's one aspect of it. Certain funds look at the volume price parameters. Certain funds look at different aspects of technical analysis parameters. And there are fusion analysis where you combine the fundamental and the technicals and form that. So I would suggest that it's better you can diversify looking at these funds, but you have to stick with some big players, or maybe mutual funds or schemes that have that track record, that performances have been tracked, and those can give you much more better comfort in diversification, rather than giving it to someone where you have no understanding about.
Yes, absolutely. Somil, and what is your view on this, whether viewers actually looking to diversify the equity portfolio through algo trading and wants to know any good product that is there maybe specifically for this mid-cap side or a thematic stock side that they could use?
I think trading algo on mid caps would be a little risky before having experience. It'll be extremely risky because mid caps are very volatile, and if you start trading algos on them without having any experience, it'll be very risky. Thematic stocks, sector trading would be all right. I think you can select a few sectors like IT or pharma, which have a trend, which they don't have too much of volatility. So I think that would be all right. But I don't have any specific recommendation on any of the products. But I think MT4 is good for beginners when you start trading algo.
Okay. The next query is coming in from Kamal Kapoor, who's writing to us from New Delhi. He's saying that he has seen algo product offering trend following as well as mean revision strategies. Wants to know how to decide which suits his trading style the best. Ashish?
See, it's very important that every trader should understand their own trading personality also, because not everyone is comfortable with trend following, where you are trying to capture the momentum. There are people who are more comfortable with mean reversion, but then at that time you are then compromising to the extent of the return that a trend following or a breakout market can give, because in a mean reversion technique will not work when the markets are trending and making new highs, whereas mean reversion will work very well when the markets are in a sideways action or it is correcting with not much of a magnitude. So I would suggest that it is to be coupled together, because not every technique will work all the time. Know your trading style, know your personality. Trading personality is what I say, and then decide whether breakout or trend following works for you or mean reversion works for you.
Okay, and your view on this, Somil?
I prefer trend following most of the time because we have a very volatile market. We don't have a very sideways movement for a very long time. So in our market, I think trend following is definitely preferred. I don't have mean revision strategies because I don't prefer to catch tops and bottom. That would be a little risky, and very high risk trades would come in with mean revision strategies.
Okay. And Ashish, we have this next query which is coming in from Rahul Tiwari, who's writing to us from New Delhi. Wants to know what kind of technical expertise do retail traders actually need to fully utilize algo trading products?
See, I would suggest that algo products it's a vast field altogether. You need to understand certain technical parameters, certain basics of those technical analysis understanding. You need to understand what goes inside the algo is very crucial. So suppose if you buy an algo product and run it for yourself, you need to know what are the parameters that are driving that algo. And then you have to get into the understanding of that parameters which are driving it, because only then you will be able to tweak it when it is necessary. So I would suggest that basic understanding of technical analysis, understanding about basic indicators, moving averages, those are important. But what is required is whether your algo is made up of those basic indicators or is it made up of some complex things. So you need to understand that first and then deep dive into those parameters which are driving that algo.
Okay, perfect. Thanks for that view coming in there, Ashish. But that was the last query for today. So thank you so much, Ashish, as well as Somil, for joining in with us on the show and helping viewers answer stock-related queries as well as individual algo trading and algo product queries related as well. So thanks so much for that. That's all the time we have on this edition of Your Stocks on CNBC TV 18. Thank you so much for tuning in. Up next, you will have closing bell, so don't go anywhere.